Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 26th of September 2019, and we're dealing with a number of financial aspects this week, including gold and silver prices, why they fell slightly yesterday, the strength of the US dollar, rising stock markets, and some of the aspects of geopolitical and political concerns. So let's investigate. We are writing today's podcast video at 1600 British summer time, with gold currently standing at $1,507 against an opening this week of $1,517, and silver at $17.93 against an opening of $17.99. Now that in itself is pretty unremarkable, except that since Monday, gold has been as high as $1,535 and silver as high as $18.74. And did we take some stick from a couple of subscribers and a few trolls who appeared on our channel from nowhere, made their first comment criticizing our forecast, which stated that gold will very likely fall to $1,450 and silver to $1,750 very soon. Well, it looks like we're heading in that direction, and if it doesn't happen this week, we are quite confident it will happen within the next 2 weeks, providing, of course, that the Iran issue does not escalate. So, gold and silver have fallen back from their highs this week, and a number of subscribers have asked why, especially in the light of a number of YouTubers who could not contain themselves when it went up on Monday and Tuesday to say, the resumption in the gold and silver bull market is here. We're now on the way to $1,600 gold and $20 silver, and then the road to all-time highs. But when it fell back yesterday, these very same people started putting out videos explaining why, as if they knew this was going to happen in the first place, although it completely contradicted what they said on Monday and Tuesday. You see, these are just people who read Zero Hedge and the conspiracy channels, listen to Peter Schiff, and follow all of the usual pumping suspects and talking heads who are telling you that gold and silver are going to infinity and the dollar is going to collapse tomorrow. Now, in fact, we smiled today as the start of the year there were numerous headlines and YouTube video captions stating, quote, economic collapse 2019, unquote, as they were in 2018, saying economic collapse 2018. Well, now that we are near the end of 2019 and the economic collapse has not happened as yet, you've guessed it, new headlines are now appearing. Economic collapse 2020. And to think, people listen to these propagandists, and in our opinion, and we may be a little harsh here, potential traitors, deliberately trying to create panic and undermine the US dollar. And if they're not those, then perhaps they're just desperate to earn AdSense income and just create these headlines as clickbait. Now, in fact, the other day we came across a video of our friend Peter Schiff appearing on RT, Russia Today. Now, please bear in mind that RT even quotes on its YouTube channel, quote, RT is funded in whole or in part by the Russian government, unquote. Ask yourself, why do so many of these conspiracy theorists and gold and silver pumpers and doom and gloom merchants end up on RT? Surely it's not to undermine the United States. Surely not. Anyway, back in October of last year, on the 24th in fact, this is what Peter Schiff stated while he was on the RT program.
Well, the signs are already there. I mean, look, the stock market is falling. 40% of the S&P is already in a bear market. So the stock market is forward looking to the next recession. You're looking at what's happening with the home builders, the housing stocks, the financials, the retailers. All these are the same things that were happening in 2007, leading to that crisis. So people need to be prepared. This is not only going to be an economic crisis, but a political crisis as well, because the Republicans are going to take the blame and socialism is going to be seen as the solution, and it's going to make the problems that much worse when it's implemented, 2021. So what you've got to do is get out of U.S. dollar assets. The dollar is going to be the biggest casualty along with the American standard of living, but you've got to invest in foreign assets. Look at some of the bargains in foreign stock markets, emerging markets that have been depressed by the strong dollar. They're going to see a boom when the dollar weakens.
What wonderful, impartial and accurate advice this man gives. Now, when he gave that interview, the Dow Jones stood at 24,583. And yet today it stands at 26,931. Equity collapse. And it has been as high as 27,398. At the time of his imminent dollar collapse prediction, the dollar index stood at 96.4. And today it stands at 99. And if we look at the MSCI Emerging Market Index, it has little changed since October last year, though it has admittedly attempted a few small rallies. Now, we took him to task in an earlier video this year, and he appeared on our channel, basically boasting how much money he has made compared to us, and therefore should be listened to, and us ignored. We don't doubt it, Peter, but how much have others lost listening to this doom and gloom, imminent collapse nonsense you keep pumping out as often as anyone will give you an interview to do so? For 10 years he's been calling for the imminent collapse of the dollar, and yes, we can guarantee he will be right one day. It may be 2025, 2035, or 2045, and no doubt if he is still alive then, will appear before us saying, "I told you I was right." Well, listeners, we made very clear in an earlier video this week, details of which we list in the description box below, that the whole economic system is based on confidence, as is money. And once that confidence is undermined, then the whole thing could very well collapse. But the consequences will not just be financial, but also have serious security implications, life and death implications. And the more we hear these pumpers and imminent doom merchants appearing on Russian state-sponsored television, talking down the United States and the West, we seriously begin to question their patriotism. It truly is as critical and crucial as that. Peter, if you're listening, rather than condemn the Fed, rather than misleadingly claim the dollar is going to fall through the floor when reality is proving otherwise, why not try and say something positive about the US economy, especially when compared with other countries? Now, we know it doesn't suit your narrative, or perhaps your own pocket, but someone who criticizes what was once his country so much makes us wonder why you live in it and profit from it in the first place. Oh, sorry, but you don't, do you, Peter? You moved your business to Puerto Rico back in 2015 to avoid paying taxes in the United States, which you actually boasted about. Very patriotic from someone who originally made his money there in the first place. Just be careful, listeners, as to the motives behind the people you listen to. Anyway, back to what happened yesterday. Well, the S&P 500 halted a 3-day slide and rose by 0.6%, with tech and bank shares rising. Equities, rattled by the political turmoil in America, turned higher after President Trump suggested a trade deal with China was possible, and then moved towards a pact with Japan. The advance recouped most of Tuesday's fall, sparked by the start of a formal impeachment inquiry into Donald Trump. Sterling, the euro, and the Japanese yen all fell against the US dollar. Yes, that currency allegedly on the verge of collapse. The yield on 10-year treasuries increased 8 basis points to 1.73%. The yield on 2-year treasuries rose 5 basis points to 1.68%. WTI crude sank 1.3% to $56.53 a barrel. And gold futures tumbled 1.9% to $1,510 an ounce. So, why is all this happening when the UK is facing a constitutional crisis as the Supreme Court ruled Prime Minister Boris Johnson's proroguing or closing of Parliament was illegal, and so it is reopened? When the US is in the throes of an impeachment inquiry or crisis? When the Eurozone is lurching towards recession? And why has the US stock market nearly hit all-time highs yet again? Well, frankly, we only have to look at some of the economic figures announced this week. Market manufacturing flash PMI for September rose from 50.3 to 51. Services PMI rose from 50.7 to 50.9. New home sales for August rose from 666,000 in July to 713,000 in August, compared with forecasts of just 660,000. And quarter 2 GDP revision remained at 2%, the same as the previous quarter. And even advanced trading goods, though minus $72.8 billion, was better than the envisaged minus $78 billion. So the financial situation in the United States, whilst not wonderful, is also nowhere near as bad as the Schiffs and pumpers are trying to make it out to be. Now that said, we must also not ignore the fact that markets function as their own balancing mechanisms. So a strong dollar, whilst on many fronts is positive, will eventually bring down US competitiveness, which in turn affects company profitability, which will eventually prove negative for markets. Now this is why, to some extent, both fiscal policy and monetary policy is important in balancing these out, so that at least a relatively calm and stable market can exist and hopefully allow for growth. Now many may not like to hear this, but this is why the Fed and other central banks occasionally intervene. But even their intervention cannot compensate for an uncertain and destabilizing economic trade policy, which is why it is so important for the US and China to eventually agree a deal. Obviously beneficial to both parties and more so to the US, otherwise why was the dispute created in the first place? Now on the weekend we shall provide our normal weekly update. But as things stand at the moment, though the President has cast some doubt on the China trade deal today, so we have moving sands yet again, and politically he is in hot water over the Ukraine situation, the US economy is holding up relatively well. And tomorrow we have quite a large range of financial figures coming out, which will, no doubt, dictate where markets end this week. Now, for those gold bugs amongst us, and forgive us, more gold than silver, admittedly, at this stage, you'll be pleased to hear that a survey of fund managers, produced by the British group Absolute Strategy Research, suggests that both the United States and gold are seen as safe paths of least resistance. And therefore, we can, if they're right, continue to expect to see the dollar maintaining its strength, equity markets holding relatively firm, and gold, whilst perhaps slipping back a little short term, is still regarded as a safe haven, especially when the economics and the geopolitical situation becomes more unsettled. Thank you for listening. Do share your thoughts. We hope you have found this video interesting and informative, And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.
Glory, glory, hallelujah.